Good morning. Good morning. Good morning. Hopefully you're having a good start to your morning. We have news that happened at 8:30 and now we are waiting for the market to open here in about 9 minutes. Let me switch over to his screen right here. It's going to be a good day today. Hopefully you're having a good day yourself. I am all up and rocking and rolling. I decided not to get my coffee this morning, so I'm just drinking some water right there. Yep, bubbly water. If you ever have a Soda Stream, they're great. It's great. Okay, so what am I looking at here? I am looking at us going higher. I mean, I was that way yesterday, but I'm for sure that way today. We have ran a few key levels here, and we're in a daily fair value gap that we just hit yesterday. And they're sitting right here, daily fair value gap. All right, so let me put that on here on the daily here. Okay, so we ran into this daily fair value gap sitting right here. And today is Thursday. I mean, Thursday tends to be a reversal day. So my expectation is we get some type of reversal. We may have already seen that in the pre-market, where we're looking right down here around in the London session. We may have already received that. This here is the This is the news at 8:30. Here is the news candle, and then that ran these lows here. So I'm looking this as an intermediate leg. I don't expect this news candle to be ran. I just don't. We have another swing low taken out here and a nice expansion higher. I put on here a 1 minute. You also had a 1 minute right here. So that worked out. If we go down to the 4 hour, 4 hour, here's our previous day low and high from midnight to midnight, and equilibrium is sitting right about 19,483. How are you guys' day going? Morning. Morning, CM. Good morning, Adam. Had any trades yesterday? I closed church early. Yeah, I took 10 handle loss on a long. We just kept dropping and dropping and dropping. It was those were probably my least favorite days. It's just when we never retrace. We ended up retracing, where did we retrace? We ended up retracing here for a little bit. But just the market just kept dropping and dropping. And by the afternoon, I was off stream. I wasn't doing anything, so. All right. Bonus Thursday stream. I normally do Thursday. I do normally do Thursday. I just normally don't do Tuesdays. So If I can be on stream, I prefer being on stream. Isn't that crazy? I actually prefer streaming and trading than trading by myself. I'm doing this for me, guys. I'm doing this for me. It's for me. It's for others. I think you can get it can be for multiple reasons, but I really do generally prefer streaming than trading on my own. It's because then I can talk and I don't feel like I'm just talking to myself, you know what I mean? And I like hanging out with people, so even though it's a little bit different, it's still hanging out. Sorry, my eyes are feeling crusty. Okay, so we have our midnight open sitting right here. Opens here in 3 minutes. I'm bullish, but I don't know how bullish considering we're already up in the range. I would really like us to drop a little bit. So let me drop down to the 5 minute. I want to see what we got here. You see that 5 minute order block right there? Isn't that crazy? Look at that 5 minute order block, bullish order block. I've been putting some stuff out on the 5 minute order blocks and 5 minute change in state of delivery, and I'm liking them a lot more. The more I kind of watch them, the more I'm liking them. That is a 5 minute order block. All right, so going with the bullish sentiment, I'm watching to see if market wants to go up to these equal highs. We have some equal highs that are sitting at the evenings, or in the evening from yesterday. All right, so that would be buy side liquidity sitting right there. That's my first target. So I'm looking for I would like to see a manipulation leg lower and then it reverse and start moving higher. Down to this BPR. This is a balanced price range right here. I would like it to see it run into that maybe. Here's another example of a breaker, or excuse me, of a 5 minute change of state of delivery right here, and that also overlaps with the breaker. This is why I like them, because it's an easy way for me to identify breakers. So here's our low, high, lower, low. We have this manipulation. We break higher, we come back down into the 5 minute breaker and then move higher. So this is why I like them. All right, so we're at the open here. That's this is a little bit of a soup right here if it wants to not move any lower. I said I wanted it to come down into this BPR right, or this fair value gap right here. Let's see if it holds or if it wants to continue moving lower. If we look at the other way, let's just look at this real quick. That would be a bearish breaker right there. High, low, higher, high, break lower. This would be the breaker sitting right there. I'm not looking to go short right there. But we have equal highs right here. I'd rather do these equal highs than running lower, because this area is jagged. This is smooth. And we got smoother levels that are up higher as well. Now, looks like the breaker is working. We have an inverse here. We'll probably run these lows sitting right here. All right, so there's that low right there. Looks like that 5-minute breaker did work. The 5-minute change in state of delivery, also the breaker. And I wouldn't have taken it anyway because it was right at open. The official high change in state of delivery is right here. So this was the official change in state of delivery. As soon as we closed below that, we could have waited for the breaker, or we could have taken entry right when we came back and touched that 5-minute. And that's where it would have been right here. And it would have been right at 9:30 and 30 seconds. And I just wouldn't have taken that. But that absolutely worked. I want to see it stab into this 5-minute. This is a 5-minute fair value gap. Looks like it may be running into a 5-minute bullish breaker. Yeah, I have that marked here, the 5-minute bullish breaker. But also we have a 5-minute fair value gap right here. I'm not gonna take it on this knife. I mean, don't try to catch a falling knife right here. We got 10 minutes till the 15-minute close, but if the 15-minute close is below this, we might have to shift our bias. We'll see what happens here. I mean, I'm bullish even now with the way we're looking, but I wanted it to come lower. That's really what I wanted. Now I'm just waiting for some type of support where we can find a long. Just swept yesterday's PM low. I expect to go for buy side, leaving 8:30 a.m. and London low intact. I'm leaning more towards that myself. I don't think we're gonna run all the way those lows, but we'll just we'll wait and see here. I'm not taking this. I don't want to take it. Looks good though. So here's why. I mean, I'm on a performance account. I don't want to take risky trades on my performance account. You could do that on an eval account. You could take this inversion and run to the lows. You could do that. But if I'm going to take a trade on my eval account or my performance account, I want it to be legit. I want it to be not, I don't want to feel like I'm chasing. I don't want to feel like I'm making a stretch for an entry. I don't want to do that. I want to take a trade that I feel really confident about. So that is the main reason. I'm willing to say no, no, no to 10 trades for that one. I'm willing to do that. And you just have to do that if you want to be a profitable trader. It looks like it's going to be invalid here in a second. Good morning, BF. How you doing? Now this looks more attractive here.
Order submitted. Order submitted. Order submitted.
All right. I took that trade. You should have heard that. Good morning, Matt. All right. Do you guys see what just happened there? How I changed. I didn't want to go short and it changed extremely quickly. Did you see that? All right. So let me show you on the 30 second. So we are on the 1 minute, or let me jump over to this screen right here. Sorry. All right. So here's the deal. We have this 5 minute right here. We closed below the 1 minute, this giant 1 minute candle right here. Okay. So we closed below it and then we invalidated it. What did we do immediately following this invalidation of the 1 minute? Here's the 1 minute right here. Okay. 1 minute. 1 minute fair value gap sitting right there. And I'm going to be quick because I think we still have some opportunities for some trades here, but I want to make sure I explain this. So we have this close below, we have an invalidation of the trade, and then immediately following that, we start getting this bearish candle. So what did I do? I'm like, I dropped down to the 30 second because this most likely has a fair value gap in it. So when we drop down to the 30 second, here it is. Here's the play. Okay, so this is the 1 minute. This is the 30 second. As soon as we invalidate this 30 second, I'm going to go short to these lows because the risk is a lot less. So that is why I took that. Okay? That is why. The risk was less. It was shorter. I could move my stop to break even a lot quicker. I did, and then as soon as we went below here and didn't expand any lower, I just took my profits for 15 handles. That's exactly what I did. All right, so let's see what else we got here. Oops. This is very bullish. I'm waiting. I would like to see. We got a bearish breaker sitting right here, guys. We're right at a bearish breaker right now. I expect if we push through that, great. We're probably going to run these highs. Let's check out different time frames. We're on the 30-second. Here's the 1 minute, 2 minute. Okay, I like the 2 minute there. Let's check out the 3 minute. 3 minute looks more obvious. 4 minute. 4 minute has 2 fair value gaps. I like the 3 minute. You could do, this is just more conservative in my opinion. So that was a copied account for me on that trade. So I'll be done with all those accounts. That was $150 copied. We also have this short here on the 1 minute if we close. Okay, no close there. I longed the 15-second. Okay, letting 1 micro run now. Drop back down to tiers. Macro time would be nice long. Yeah, we could still close here and run for these data lows. We just hit this breaker. 5 minute breaker, 5 minute fair value, 5 minute fair value gap sitting right here. So we have a lot of reason. We're seeing some support. We just need to see if it wants to run these lows right here, because this is another breaker sitting right here. So I'm looking at a short. Let's see what happens here. All right, I'm going to take that right there. Stop will be a close above this. And it looks like it's going to run against us here. Okay, there's a continuation. All right, I move stop to break even, just in case, because of how volatile it is. Have your target at these lows right here. Let's see if it stops us out. We're really close to the, okay, continue. Let's see if we want to see a continuation. Come on, give it to us. Still in it. And, oh, almost tapped out. Okay, there it is. We got some move. If you want to take some size off, I'll take some size off right there. Holding for these lows, and then keep a runner for this low right here. We got to be careful. It doesn't grab this low. It may completely reverse if it wants to move higher. So we need to have it grab this low on this push right here. 3 seconds. I want to see it. Okay, I probably would take size off there. That's 38 handles. I would take size off there. Or 36 handles. That, I mean, even if we don't hit it, that's a great trade. If you're holding the runner, you can hold the runner for this low or the data lows. See what I mean? How if it doesn't grab it, it kind of will sit here. I don't like that. I hate that feeling because then it will run against you just like this. So 36 handles, what is that? 35 handles right there. And we're probably going to get stopped out. I am all out. I'm done. I'm out of this trade. I took my profit and I am out. Absolutely. It's the best when you get your wins in, CM, because then I can just sit here and not stress and do some tape reading, do some educational content, and not stress. Come on, hit it. All right, there's your profit target. Target hit there. I'm not 100% convinced we're going to run to the data lows down here. I'm going to get rid of this green. I get tired of looking at green. Good morning, John. Stop there. If you didn't take profit there, you would have got stopped out for break even now. This scandal right here probably freaked some people out. We got in at this close. We got in at the close below this fair value gap right here, and it ran 26 handles against us. That can be very scary. But that's, I mean, as soon as it did that and it closed lower, I moved my stop to break even because with the amount of volatility, I didn't want that to happen again. Based on order flow, guys, looking at this order flow, I think we probably are going to run the data lows. Looking at just the structure of this, I think we are going to run the data lows. We have a nice breaker that would played out right here. That you would have to handle some drawdown as well. What would that drawdown be? 17 handle. 17 handles of drawdown, but the body's closed within it. It never came back up to the 5 minute. What does that look like? Oh, I'm just looking at Apex. I'm super close. Super close to getting that custom code. Almost there. Thanks for all your support, guys. I really appreciate it. Thanks for using that code. It means a lot. All right, we're at 950. We're consolidating here. We're probably going to do this consolidation crap and then just spike lower. We had some volatility here this morning. We had some volatility. We had some plays not work, and we had some plays work. So I think this is worth us going and breaking this down and doing some post analysis. All right, let's check this candle out. We might just get it real quick. If we get it real quick right now, which more than likely we will, you don't get a large candle like this and it just not go. Okay, we do have this OB here, where we should hit that data low. What was I saying? But I think we'll have some good post analysis for us to really dig into here. This is going to be some great content for education, not just for you guys, but for me even. I mean, watching some of this stuff happen, it was volatile. It had a little bit of wicky, so it had some wicks going on. So we had to really be disciplined and not just close based on the wick of a candle. All right, here we're gonna run it probably. So now what I used to do would be, oh, I'm gonna go short here and then sell it, and then it doesn't hit. So don't do that. Don't do that, please. Please don't do that. Just because I say we should hit, I'm just talking. I want it to hit, and the high probability it will hit, but it could retrace 20 handles and then you get stopped out. You know what I mean? There's the Apex code that I'm hoping to get replaced. Thanks for using it, guys. For those that have, I really appreciate it. Come on, it's gonna hit it. There's equal lows. There it is right there. Okay. All right, now that we hit the data lows, I don't think it means we're going to reverse. I just think it was a draw in liquidity. We still have lower lows down here, and that is just crazy. Look at this. Look at this. This is the 4 hour. Where's a freaking green candle? We haven't seen a green candle for 2 days. We have not seen a single green candle in 2 days on the 4 hour. And then look how it expands. Okay. Quick point right here. When you are running and you're looking for a draw in liquidity, when you get this, and if your bias is short, after it grabs liquidity, you can almost expect the next candle to have a large move. It just happens so often. It's hard to predict, but when it does, you get a large candle that follows when you break a level. Because why? Everybody thinks this is going to be low, so then people are starting to go long here because they grab liquidity, it's going to run the other direction, and then it just explodes lower, destroying anybody that wants to be in it. So bias is obviously not long. I was wrong on that again, but we shifted that. We shifted that as soon as we saw some of this large momentum down. We saw this candle here. I did put a 3-minute here that we were watching. This is the 3-minute. We were watching this 3-minute fair value gap that if we broke higher, but I said we also had this breaker sitting in here as well. And if we started rejecting, I said this is evidence enough for us to start moving lower. And this is where I went short on that play right there. I did take a quick short right here, a 15 handle short right here. But the big moves are usually going to be after the manipulation. So this was our manipulation leg. Everybody thinking it's going longer, and then we can go short. You can be able to hold it for a longer move if you have the balls to do so. It got stopped out here when we were at break even by a tick or so. No, it's a little bit more. 45. 2 handles. But I'm interested in this breaker. This is an obvious breaker. Why? I'll tell you why I like this breaker here. We have a fair value gap on the left and a fair value gap on the right. We have a fair value gap on the left, swing low, fair value gap on the right. Price comes up into that. It actually reaches for the highest fair value gap, which is sitting right here, and turns around. Now, I didn't take this. Why? Because we were extremely bullish and we could have gone higher. So what did I do? After we found resistance here, we found our first inversion to the downside. Not the first, but the inversion to the downside before the swing low, and that was this level right here. So this was our confirmation that price is moving lower. BF 190.17. We just tapped that. We just ran through that. John, this is important to take note of. Great example. When higher time frame order flow is bearish and we get a 830 manipulation up above a swing high and we get an expansion at 930, we are creating a bearish order block for future downside. Let's look on the 15-minute here, guys. I think that's a good point to illustrate. So here is our order flow. So higher time frame. What is our higher time? Higher time frame. Look at that. Higher time frame is bearish. Nothing. Okay. When we start going down to the 1 hour, we have at 8:30, we have a manipulation leg. Let's drop down to the 15-minute. Yep. That's a good example, John. So we have we have the data low right here at 8:30. So this is the 15-minute candle at 8:30. And what do? We run liquidity right here. So there's our liquidity run. Now, if we can't call this an order block, but we could potentially predict it could be an order block based on higher time frame order flow. So let me switch this up here. There's the 15-minute that we're talking about, and here's the 4 hour. Let's go down to the 1 hour. Even if you're like, well, I mean, that's just straight down. Can we look at something a little bit lower? Well, you can look at the 1 hour. So 1 hour, we still have bearish order flow here. This candle is the only candle that shows us that we have a change in state of delivery. So this is the 1 hour, and we have a close above it, but it closes right below this, and the next candle wicks above this swing high. So that is enough for a change in state of delivery, is us grabbing liquidity. As soon as we grab liquidity, we need more context. So if we're just grabbing this point in liquidity, we need to go down to a lower time frame to see what else we have going on. So we have a lower time frame at the 15-minute. We have this candle that broke the swing high. We don't have a change in state of delivery, in my opinion, until we have a close, and I said this on stream, till we close below this 15-minute. So as soon as we have a close below the 15-minute candle, 15-minute fair value gap, order flow is changing. Now, you may look at this fair value gap right here and say, well, why isn't this one? Why isn't this one telling us it's bearish order flow? The answer is we're not in a kill zone. We're not in the London AM session. This is at 7:45. Okay? I only care about fair value gaps as far as expansion lower and higher based on inversions and support and liquidity ran in the AM session. AM or PM session, the New York session, basically. So that's why this is more interesting to me than this one, because it's one, smaller, and two, time does not align. Time aligns here. We have the manipulation. We had a little bit of manipulation here, but time didn't align. So price aligned, we grabbed liquidity, and time aligned, it being 9:30. This is the 9:30 candle. So 9:30 to 9:45. It closed below it, right at the macro time. This closed at the macro time. So then we can drop down. This is going to be 9:45. Let's drop down to the 5-minute here. So this is the 5-minute close right here. This is 9:45. This is the 9:45 candle close right there. So we had a giant manipulation right here. Let's drop down to the 1-minute. So we had our giant manipulation here. We went short before then because we started seeing this order flow, but we have our close right here. This is our 9:45 close. And then we consolidate, and then we drop lower. And that's based on the 15-minute. So what John is saying is that when you go from a higher time frame bearish attitude to a lower time frame order flow, you can read order flow to help you find entries and take profit, basically. Now, did we do all of that? No, but we could have looked at this and say, all right, higher time frame, we have a narrative for a bearish. Even though I was not bearish. I'll be honest with you. I was not bearish even on a higher time frame. Even though I would say I am bearish, I was expecting a retracement. I mean, when you see this, and this is just, maybe I have stuff to, maybe I have learning to take place, and I'll admit if I don't know something. I don't have a problem doing that. 100%. I will learn. But when you see this, and we do not have any single grab of liquidity, and we've already grabbed a major key level, a swing low, I'm expecting a retracement. So that's why I was looking for a long. That's why I was looking for a long. Main target is 18,940. That'd be down here. What do you got down here? There's 926 for a breaker, but the last 4-hour fair value gap is sitting right here. Let's just put that up. Let's see what happens. This is our last fair value gap on the highest time frame besides the daily. I don't know. Is there one on the daily? There's not a fair value gap on the daily. So the 4-hour is the last higher time frame, and it looks like we're about there. It wouldn't surprise. That'd be crazy if this does this. All right. So there's the, look at this, look at that, look at that. You see that immediate retracement right after we stab into it? The initial stab, we get a retracement into it. Sorry, I was muted. If we close below this on the monthly, that'll be a change in state of delivery on the monthly. Yes, we do have an order block right here. My guess is we'll probably get some type of consolidation over a couple months, but we could see lower prices on a higher time frame if we close below this monthly candle. Sorry about that. Weekly. We're inside of a weekly order block. We got a weekly fair value gap sitting right here. We got more weekly fair value gaps down here that could be rebalanced. It is moving with great intention. I mean, the last 2 days or 2 weeks, just straight drops. Good morning, Trevi. Thanks for joining. I appreciate it. My mistake when I started out is I'd marry to a bias so hard. That sounds weird the way I say that. But legitly, I would marry a bias and I would just burn myself over and over and over again. And if I'm honest, I've done that even recently, and it's a constant reminder. You have to be flexible in a market like this, but it has to be a logical reason why you're changing. No, there's no way I'm muted. I'm not muted. My audio says that I'm up. Can you hear me? How about now? Can you hear me? Oh, see, that's right. How about now? Oh, yeah, that's what I thought. Thanks, Mags. Oh, I was saying, excuse me. Hang on, we're past our macro time, so I'm okay just sitting, seeing what happens here. 30. I mean, we're having a nice reaction here. I would probably say if you were looking for something, I would want to see. Let me explain it here. Here's what I'd like to see. I'd like to see something like this into this fair value gap. We try to move lower, but we don't close lower, or maybe we do, but we just sweep the low. One or the other. We don't move much lower, and then we close above this fair value gap right here, running for this high right here. I would not take it on the first attempt. Don't take it on the first attempt. So we just stabbed into it right there. Let's see, I'd like to push a little bit lower. So there's our first stab into it. I'd like to see us come down here somewhere. And then close above it. But if you're going to not marry your bias and you want to be flexible on changing your bias, it has to be done in a logical way. So you have to look at higher time frame analysis and then order flow, just like we were talking about earlier. I wonder if this is going to close here right now. I'm going to tape read this. I'm not going to take it if it goes because I personally am not going to take it. We got 4 seconds. Okay, it closes above. There's your entry. I'm not taking this. Your stop out would be below this fair value gap. Your target is this high right here. That's 50 handles, guys. This is much bigger than you think. So this stop loss is 30 handles. That's just a lot of risk. So if you want to protect yourself, let's see here. There is not a single swing high. So taking this would be, in my opinion, it would not be smart money management. It would not be smart risk management. Okay, you could watch this fair value gap right here and a close below that fair value gap. But the reason I told you I wanted to wait for it to come down is because a lot of times these fail. Because who wants to hold 28 handles in drawdown? So anytime you get a large expansion lower and you start seeing and you're like, oh, it's going to retrace this. The answer you need to tell yourself is not take it. Don't take it. Wait for another retracement that puts in an order block like this and wait for the close above the order block. Okay? So this would become higher probability if we close above this order block. Right? That's the idea. But even still, I don't like how short this is. I'd prefer more of an extended move lower that also leaves a fair value gap, because there's not a fair value gap on this 30-second, which is what I would have liked. Okay, so there's your close above the order block. If you want to protect yourself, I would say move your stop to break even now. Stops to break even. Might as well take some size off. Take a contract or two off. All right, there's our order block tag, and it probably will stop us out. There's a stop out. Let's see if it runs below the mean threshold of this order block. Right where my mouse is at. That doesn't surprise me. Respected this order block with the body closed. This is bullish order flow. We should be running up to this high. So if you're going to change bias, you got to be doing what I'm doing right now, is reading order flow, understanding where order blocks are, where fair value gaps are, and taking a higher time frame fair value gap, and when it closes below it, that should be your indication that we're seeing lower prices. So we did that on the 15-minute. Here's the 15-minute right here, and as soon as we saw prices close below this level, right? Sorry, I got a bunch of lines that I just throw up all the time. As soon as we closed above below this fair value gap, that's our 15-minute time frame. A 15-minute close is a higher time frame narrative. I'll view it as a higher time frame narrative. So we closed below it right here, and what happens? We start moving lower. Now you could say, well, what happened about here? And I gave you that answer. This one closed below this. It's because it wasn't the right time. Time is everything. Time is everything. Okay, so order flow is still in line with this. My guess is if we don't get a quick manipulation wick lower, we should just run these highs. Run this high here. But there's sometimes that I'll see a large bearish candle that will run liquidity and then wick back up just to grab anybody's stops that are sitting there. So you just have to be careful about that too. Looks like I have the right idea, just a little sooner. Right there is. Do we got a fair value gap on the 1 minute? 2 minute? So this would be stopped out if you guys were in it. I mean, you could have gotten on that first push 30 handles. These are some very big moves, guys. These are some very big moves. I mean, I would be happy with 10, 15 handles and just take your profits, get out and walk away. There's the push towards the high. The swing high right there. So that first one did work. But what did I say? If you wanted to be more conservative on your entry, you would have waited for this order block to close above the order block, and then you would have taken your long. So what happened as soon as we closed above this order block? Look at that. You got hardly any drawdown. I mean, you did. What is that drawdown? $10 handles, 11 handles. I know, these are huge candles, John. These are huge. So what you would have done is you would have made your entry as soon as we closed above it, and your stop loss would have been at the consequent, or would have been at the mean threshold of this order block. Right there. So this red line would have been your stop loss, because any order flow based on an order block, if you want bullish order flow, you want to see price stay above the mean threshold of the order block that you're watching. Okay? This is the order block. Why is this the order block? It's the lowest down closed candle, and it's the obvious large one. We never even came back to this tiny little thing here. So you got to pick the right order blocks. This order block was respected, and price moved higher. If you want balls to hold these things, you need to go one micro contract. You got to go smaller and be able to just let it run. Let it play out so you can build that confidence up and you can take those trades. But after I have my win, I'm just going to stay out. That is my rule. I'm staying out and I'm sticking to it. But this is the reversal that we're talking about. And we're probably going to get, it wouldn't surprise me if we get a full reversal here. Let me rephrase that. It wouldn't surprise me if this is a market maker buy model. All we need for a market maker buy model is for this to close right here. As soon as we close above this level, if we close above that level right there on the 15 minute, I'll call this a market maker buy model. That's in 3 minutes. We filled in this 4-hour fair value gap. And we could run all the way to these highs. We got some choppiness over here. But based on how quickly the price is moving, it would not surprise me. Look what happened here. Did you see price come back and hit the level that I just marked out for you guys? Even though this is the 30-second time frame, it's referencing that 15-minute order block. That's my opinion. I could be completely wrong if we just collapse right here. But if we find support right there and we continue to move higher, I mean, I'm expecting a retracement. We will see some type of retracement here. But it's, at least for the next 2.5 minutes, we want to see it close above this. That's what I'm curious on. I'm going to have to leave here in about 45 minutes, guys. So I got about 30, 45 minutes. Right now, I'm just reading order flow with you guys. So I'm not taking any more trades. I mean, I'm going to call and tell you what I see, but I'm practicing and I'm reading my order flow right now. Okay, so we also have this breaker. We have a low, high, lower, low. This breaker was ran into right here. 15-minute order block. 30-second, 1-minute breaker. Sitting right here. And we got a minute left before close. I'm hoping we close above it. All right, so it looks like we're going to close above it. Now I'm going to start looking at short-term lows and intermediate-term lows. I'm going to mark these out because I'm looking for stage 1 and stage 2 of a market maker buy model. Stage 1 accumulation and stage 2 accumulation. And that's what I'm looking for. So we have a couple swing lows here. We have a swing low here. We're going to call it a SWL, a swing low. We have one there. And then we also have one here. Short-term swing lows will be ran by intermediate swing lows. So I'm looking for, now that we've closed above this and we're in a 15-minute and we've hit a breaker, we should find some resistance here and we should see price start coming back down. So this is the breaker. This is a 15-minute. This is on the 15-minute time frame right here. We should see, now that we've hit this breaker, we should see some lower prices. What am I looking for? I'm looking for price to run one of these swing lows. It could be this one, but it also could be this one. I'm looking for swing lows to be ran, short-term swing lows. What is a short-term swing low? A short-term swing low is a low that hasn't been violated yet, but when it is violated, that shows you a short-term swing low. Intermediate swing lows and swing highs are swing lows and swing highs that have grabbed short-term swing lows and swing highs right here. So this is considered a short-term swing low. As soon as we break that, this is considered a intermediate swing low right here. Why? Because there's a swing low here. There's a swing low right here. Do you see the swing low? So that is a short-term swing low. As soon as we break it, now this is our intermediate swing low. But we don't know if this really is our intermediate swing low until we see order flow choose to move higher. As soon as we break lower, this is now a short-term low, and this is our intermediate term low. And so this terminology works well in market maker buy and sell models. So we're watching order flow here, and we're looking for one of these two levels to be ran. And I can almost guarantee you they'll be ran. One of them will be. There's just zero doubt in my mind. Now the question is it this one or is it this one? I don't know. I don't know yet. Now, the only reason I could be wrong, and I'll raise my hand as the first one to acknowledge that I was wrong, is if this is not a market maker buy model. If this is a simple retracement for continuation lower based on a higher time frame analysis, then we'll run these lows, but we will not continue higher. We'll run these lows and just keep dropping. So what I'm looking for is something where we run here or here. Let's just say it's this low. And then we start moving higher. And then I want another short-term low that doesn't run this low here. And that is where we go long. This is the beginning of second stage accumulation, and that will typically happen after some consolidation, after an intermediate term low is put in, and it will run those, and it'll start running for the highs. Now, do you see how we could have just took a short off that 15-minute and grabbed 10 handles? You could have got in short on that 10 handles. It would have been, with this volatility, I don't think you're being able to do anything with just 10 handle stop loss. And you would have been able to grab 37 handles on a retracement. All right, so now, what do we got here? We have another short-term. Why am I doing SWL? Oh, swing low. So this is a short-term swing low. I don't know that's why I'm doing it. It just... Let's just do SL. That just makes more sense to me. Sorry, guys. So right now we have another short-term low. So I'm marking out all the short-term lows that show up, and I'm waiting for one of them to be ran. It could be one of them. It could be multiple. It could be all of them. We don't know. We're just waiting for an intermediate term low to be put in. Short term, short term, short term. Okay? As soon as one of these are ran, we are now putting in an intermediate term low. And we may never grab this short-term low. We could put another short-term up here, short-term low put up here, and then we run that short-term low, and then we move higher. So it may not be these. If we put in more short-term lows, well, then I'm gonna mark those out, and we're gonna follow them. This is me tape reading here, guys. Okay, that's a 5 minute. I'm just marking some stuff out. I just want to see what it looks like and see what happened. This was the 5 minute close. Change in state of delivery. We broke above that at 10:20. So 10:20 is right there. That was our close above. And we found support here. So 5 minute found support. I honestly, I would have waited. I wouldn't have taken a long off of here. I would have waited for us to come and drop down into these fair value gaps. There's one here, here, and here. That's really what I would have wanted to see. So if you don't see what you want to see, you stay out. If you guys have questions about anything, please drop them in the comments. I'm happy to answer anything. Technically, this swing low right here is a short-term low. Okay. That is a short-term swing low sitting right there. And this right here is an intermediate term low. It does not mean we're going long from that. We need more context. Okay. That right there is an IL, or an intermediate term low. Any swing low that is grabbing liquidity here. I know. I mean, yeah, I'm speechless, to be honest. So we have our intermediate term low here. Now we're waiting for another short-term low to be put in here on the right side of this intermediate term low. Okay, so we have one right here, but I'm specifically waiting. This short-term low has to have a fair value gap on the expansion. That is what I'm waiting for. So we have another short-term low here. We may get an expansion, or we may get a fair value gap. I'm waiting for the fair value gap. And I've been watching this for a little bit, and this model for market maker buy models. And I'm looking for a fair value gap to be put in. So we don't want this to be closed. If it closes, that means this isn't what we're looking for. It means we could still run all these levels and put in a new intermediate term low. But if order flow stays in line with what it is, we have a intermediate term low, now a short term low on the right side, and in 20 seconds we'll have a fair value gap. As soon as we come into that fair value gap, we have our potential entry. Let's see if the 1 hour, yeah, I mentioned that. So we are in the macro time. We are now, it's 10:45. My long, I'm looking for a long off of this fair value gap. That is what I'm looking for. We put in our intermediate term low. We have our short term low right here on the right side of our intermediate term low, and it left a fair value gap in its wake. Now I'll want it to come into this fair value gap and then use that as a long. I'm not taking this. This is me tape reading. I will not be taking an entry. I will not be taking an entry. This is me tape reading. As far as a potential target, I don't know. It could be this high. You could take a partial off of this high. You could take a partial off. You could target this high. So this is a previous day low. That green bar right there is a previous day low. That's the previous day low right there. So if we go to the daily, we should see price. Right there. So that's the previous day low. All right, so we're looking for it to come in here. So I'm looking for it to find support. Let me clarify. I'm looking for it to find support here, but I want it to leave another fair value gap to the downside, and then we go long on the inverse. That's how I would play this. So it would look something like this. We see an exaggerated move that way, and we continue higher. but I want there to be a fair value gap sitting like right there that I inverse. That's what I'm looking for. All right, so there's the touch of the fair value gap, but we don't have a bearish fair value gap that I can inverse. That's how I would take the long. So market maker buy model. We have our low risk entry, which is right here. We have 5-minute change in state of delivery, and we have our breaker sitting right in line with the 15-minute change in state of delivery right there. That would have been your low risk entry, and that would have been your opportunity to go long from this on this big drop here. So now we're looking for, this was stage 1. Now we're looking for stage 2 expansion higher, and I don't see it quite yet. The model that I would want to get in is on an inversion like I trade, but I want it to come into a fair value gap but leave, it may still do this, and leave a fair value gap to the downside and then inverse it going higher. I doubt there's one on the 30-second. Yeah. And if it doesn't do it. It doesn't give it to us. That's okay. I mean, it did hit this fair value gap, which there it is. It did hit it, and it ran to that high right there and probably run to this high. So the idea as far as what I'm talking about, as far as order flow, it did exactly what I've been talking about. It just didn't give me the inversion for me to go long. Do I got to go down to the 15-second CM? I don't want to go down to the 15-second. I mean, that's hard for a lot of people. Here's the 15-second. Yep, you're right. There it is. Bam. Entry, long, money. How much is that? What is that? What is that? 28 handles. Even with no entry, taking no entry, it's, yeah, I'm not going to take a 30-second entry or a 15-second entry. I know, it's it is. These candle sizes on the 15-second are like 1-minute candles. Let's see what happens right here. I mean, we're right at the previous day low. Does it want to go through it, or does it want to find resistance at it? Now, you could say, Tyler, why didn't you just, go long here? You could have done it here. You could have done it here. You could have done it here. You're absolutely right. But I was specifically calling out, I was looking for an intermediate term low to be put in. Because if you go back and you look at price action, you may not know, intermediate term lows can be put in anywhere here. And so I want an intermediate term low to show me that I'm going to have a protected low. That's what an intermediate term low typically means if you're on the right side of order flow, is you will see the intermediate term low be protected and it will not be ran. And it doesn't mean it's the first low taking a short-term low. That's not true. It could come lower and lower and lower. You just got to wait for that intermediate term low to be put in, and then a short-term low to be put in and not run it, and then run the other direction, and then we go on along on the inverse. So if the 10 a.m. candle closes above the 8 a.m. 1 hour high, we have a 1 hour change in state of delivery, which would be bullish. John, you're referring right here on the 1 hour. Right there. And what do we got? 5 minutes left? That's a lot of movement. Isn't that crazy? Yeah, that would be very, very bullish if that happens, John. Very bullish. Man. How many of you are getting FOMO or have tried to trade this because you're getting FOMO and you don't want to miss out on all of that movement? How much? I mean, literally, that's 100, 200 points, 300 points. This is a 300-point move. 1880 tonight. That's 400 freaking points. That's just insane. 400 points in an hour. Max. Dude, if you did not get a trade in and you are not green, you're probably either drooling or hurting because you've tried to trade this, wanted to go short, got burned. All right, we're finally getting some type of retracement here. Did we grab that liquidity? We did. We grabbed this high right here. Okay, so now I'm looking. I want to see what we're going to have here. We may not get that, John, if we do get a retracement here and we violate this fair value gap. Just need a piece. That is it, John. Just like I tell everybody, 10 handles. Get your 10 handles and get out of here. Get 10 handles and get out of here. Come back tomorrow. Get 10 handles. Come back tomorrow. Get 10 handles. Come back the next day. Just 10, 15 handles is all you need. That's it. That's it. All right, so another short-term low here. Now, because we have an intermediate term low, anytime it violates any of these, I'll still call it a short-term low until it violates this level here. Okay, it took me a long time to get this. So if you're like, I have no idea what you're talking about, it's okay. Because I started learning about these when I first learned ICT almost a year and a half ago. And I remember just being confused. And it wasn't until recently that this started becoming more clear to me. And so now I'm talking about it publicly. So if this low right here is ran, I will still call that a short-term low until we run this low here, because this is the intermediate term low that I put in. Now, if it is a prominent low, I'll call that, and there's a fair value gap on each side, I'll call that an intermediate term low with two short-term swing lows on the left and right. So the only way I'll call another, if this gets violated, if this low becomes violated, let's just move this right here. If that short-term low becomes violated with a candle like this, I will not call that a short-term or an intermediate term low. The only way I'll call that an intermediate term low is if there's a short-term low on the left, a short-term low on the right, and fair value gaps on the left and the right. That's the only way I'll call a new intermediate term low, even if we run this, okay? That is what the qualification for an intermediate term low is. But on a market maker buy model, I want to find the first one that runs the liquidity and mark that so that I can identify where my second stage opportunity is. It was right here, but it didn't give us, it only gave us an inversion on the 15 second. So therefore, I don't have an opportunity to go long. Now we're getting some consolidation, which means if we get some consolidation here, if we get some movement like this, and then we run some lows, leave a fair value gap here and a fair value gap on the other side, I'll go long on that. That would be a great move. You got to remember, even though we're up 400 points, we're still in discount. CM, you're correct. Don't give up. If you don't understand something, just give it time. Keep putting in the work, keep studying, keep reading, keep asking questions. Be a part of a community of traders that you can ask these questions, you can learn from, and you will get it over time. The one thing that you cannot learn from other people, and I learned this the hard way, and so will everybody else. Every single person will learn this one thing the hard way, and that is risk management. That is over trading, and that is revenge trading. Those three things you will learn through your own experience. %, BF. All right, it is 11 o'clock on the money. We did not close, John, above that hourly. We did not put an hourly bullish order block. I got a chiropractic appointment coming up, folks, so I'm going to call it a day here. I really want to see what happens I'm with all of this, but I'm just not going to have time. So I'll be here tomorrow. Appreciate you guys hanging out with me today. And if you want to get Apex and you already use Apex, consider using that code. I am almost there. I think I'm almost there. It's almost there because I want to get a custom code so I can get rid of that ridiculous crap. So thanks for your support, guys. I will see you all tomorrow.